Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHENZHEN Invest interim report. SHENZHEN Investment Limited offers a diverse range of businesses and services, including property development and investment, residential and commercial property management, manufacture and sale of industrial products, hotel operation and warehouse management, sale of display panels and agricultural products, provision of construction services, other miscellaneous businesses. The SHENZHEN Invest stock price has not made significant changes in the past year due to various market dynamics and company-specific news events. Two prominent companies that align with SHENZHEN Invest are SHENZHEN Investment Limited, HKG 604, and SHENZHEN Investment Holdings Bay Area Development Company Limited, HKG 737/SIHBY. Both companies have experienced fluctuations in their stock prices, with SHENZHEN Investment Limited experiencing a -32% drop over the past year, and SHENZHEN Investment Holdings Bay Area Development Company Limited showing a 10.73% YTD price performance. News events such as significant revenue increases but substantial losses, falling dividend, and adjusted dividend dates have contributed to these fluctuations, indicating that an exact 0% change in stock price is highly improbable for publicly traded stocks like SHENZHEN Invest. The primary drivers of revenue growth in the company are primarily attributed to its real estate business, which met expectations and saw significant increases in contracted property sales, income recognized from development, and sales breakthroughs in various luxury projects. The opening of new hotels, such as Waishan Jingju Resort Hotel, also contributed to revenue growth. Additionally, the company's advanced manufacturing and modern agriculture businesses experienced significant increases in revenue. On the other hand, the primary drivers of revenue decline include a decrease in gross profit margin of development, disposal of existing assets developed for sale, and a decline in development and construction services provided to joint venture subsidiaries. The manufacturing business also saw a decline in revenue, as did rental income and compensation income. Net income and profit margins overview. The net income of the company experienced a significant decline of 100% year-on-year, resulting in a loss of $0.62 billion. This drastic change is not accompanied by any information on the reasons behind it. Profit margins also underwent changes across different business segments. The gross profit margin for hotel operations increased by 8.7 percentage points to 22.9%. While development and property investment businesses saw declines in their respective margins. The exact percentages of these decreases are not specified, but they indicate a downward trend in the company's overall profitability. The lack of comprehensive information on net income and profit margins makes it challenging to pinpoint specific causes for these changes. However, the varying performance across different business segments suggests that the company is experiencing difficulties in certain areas, which may be contributing to its financial struggles. The company's debt level and interest expenses have shown mixed results over the past year. While bank and other borrowings decreased by $0.8 billion on one occasion, they increased by 20% on another. The overall trend is unclear, with a slight increase of plus 1.07% in bank and other borrowings at June 2025 compared to December 2024. Similarly, interest expenses have fluctuated. Bank loan interest expenses decreased by $127,348, while related interest expenses for the ultimate holding company decreased by $1,000. However, associate-related interest expenses increased from $325,000 to $586,000. Overall, there is no clear indication of a significant change in debt level or interest expenses. The company's financial performance varied across different segments and regions. Notably, the property development and management sectors performed well, with significant profits recorded in both years. In contrast, the property investment segment struggled, failing to report a profit in 2024. The others segment also experienced losses, totaling -$268,600 in 2025. Management is outlining a multifaceted strategy to drive growth and expansion. Key initiatives include scaling up real estate management through new projects and strategic investments, building capabilities in the technology sector by combining industrial space with tech services and investment, and developing a comprehensive asset management system over the next 5 years. These efforts aim to enhance the company's presence and competitiveness in various markets. There were no notable acquisitions or divestitures in this period, indicating a stable financial landscape with minimal changes to the company's assets and investments. That concludes the financial summary for Shenzhen Invest. Feel free to comment below, and I will be happy to answer them when possible.